Well, good morning, everyone. I think it is right about 7:30, so we're going to get started here. I apologize, we had a little bit of a problem with the meeting ID number on this webinar, and that's, I guess, part of the learning process as we go forward here. So there was actually an email sent out on Friday with the same meeting number that we used at the last webinar. There was a corrected one sent out this morning, and hopefully most of you received that and signed into the right one. If not, the webinar should be recorded, and we'll have to get that information out to people so that they can hopefully view it at a later time. So we're going to get started. Thank you for joining us. Thank you for being a part of New Vision's team. A very interesting report by the USDA this past Friday on September 11th. We're going to go through those numbers, and here's kind of an agenda of today's webinar. We're going to look at the corn and soybean both yield and production estimates that were given out by the USDA last week. Keep in mind this is a work in progress, and that we'll get updates now in October, a final crop report on yield in November, and then the final of everything next January. So there's still updates to come and changes possibly down the road. We'll take a look at what the USDA did with the supply and demand tables on corn and soybeans. Talk quite a bit about China again today. They've really been on a buying spree lately of USA corn, soybeans, and pork. And it's been encouraging. It's given this market a nice little bounce. We're going to take a look and just kind of try and get a check on where China is at and how things are looking down the road as far as trade with the US. South American exports, we're going to look at how that compares to our exports out of the US. Two different worlds as far as corn and soybeans right now. And also a lot of talk about the 2021 production estimates out of South America. Brazil is in the process of wanting to start planting soybeans right now. They've been in a very dry condition, and that may affect their planting dates and everything. So these production estimates are important because right now they're looking at very large crops, and of course the world demand continues to grow. We'll take a look at weather. The La Nina that we've heard a lot of talk about as we went through the growing season is in fact strengthening now. And what does that mean down the road? What do we watch, and what might it mean to the markets down the road? We'll also take a quick look at what world weather is looking as far as their forecast for precip and temperatures as we have the last half of September and then October. That kind of give us an idea of what might be coming for harvest. We'll take a look at our corn and soybean price charts, basis outlooks, and hopefully give you some grain marketing opportunities that you can take advantage of as we go forward here. Q&A is one challenge that we've had with these webinars, and you can submit questions if you have, either by email during the webinar. You could call into one of the New Vision numbers here at the Brewster office or send a text message. If we're not able to receive them or there's a communication issue during the webinar, we will sure get back to you later, and that's why I added on there at the end of or after the presentation. If you have questions, you feel free to call me or call anybody at New Vision. Hopefully we can help you out. As we get started here, a lot of this information is information that I've picked up by contacts I've built over the years. And this is one from Arlen Sutterman, who we've gotten to be pretty good friends with. INTL FC Stone recently changed their name, so this Stone X is basically the FCC, INTL FC Stone, just another name change. Arlen always starts his meetings out with this. How do we determine the price of our corn and soybeans? And really, if we look at this, price is the function of supply and demand. We'll talk about those tables today, but it's modified by the flow of money. In other words, do the traders in Chicago and in the world want to own commodities like corn and soybeans, or do they prefer to invest in stocks or money markets or something else? This is a big factor right now. When we look at the numbers from Friday's report, honestly, the numbers on their own were not very friendly, but the market had a very strong day. What's going on? Well, the flow of money has changed, especially since our last webinar in August now. Definite interest for the commodity funds, the managed money crowd, are more interested in owning corn and soybeans, and that's what's given us a nice rally over the last 30 days. Here's a slide from the USDA leading into Friday's report to show how this information was gathered. This is a very key report because if we notice here, in this report, USDA added field surveys. Now, typically in the past, that had started in August. This year, they started moving that to September. So we had input from operator surveys from farmers, around 9,100 people, field survey checks of just under 4,000, and then remote satellite. So there's three combinations of information that the USDA uses to put these yield and production estimates together. They are trying to do the very best job that they can. Here's another note that came from the USDA along with the report on Friday. Now, all of this information gathered was what they seen for a crop in the US as of September 1st. Now, we know that after September 1st, we actually had some freezing conditions on part of the northern plains. Not so much in Minnesota, although there were parts of northern Minnesota that were affected, but North Dakota, some of our contacts up there, they actually did end the growing season this past couple of weeks here due to frost. Now, what did it do to the crop? The USDA really doesn't know at this point in time, but they basically mentioned that future adjustments could be made. The other note that they made was on the August 10th derecho event, the wind event in Iowa. In this report, they reduced harvested acres on corn, 550,000 acres. That was about where the market was expecting that acreage reduction to be. Right now, that is corn acres in Iowa that they expect not to be harvested. Could be a little bit in Illinois and Indiana, but mainly Iowa is the focus. They made no adjustments on soybean acres in this report, but they did notate that as we get the final crop adjustments done in Iowa in some of these damaged states, there could be further adjustments in other reports, and they hope to have that done by the October USDA report. Now let's look at the numbers. Here's a table, and we're gonna not go through all of these numbers, so I'll just highlight what we need to look at. Going back to where the USDA gave us for corn yield in August, 181.8. Here is our average estimate of what the trade was thinking that number would change to in that September report, and the USDA came out at 178.49. Down a fair amount from the August report, which was expected, but actually slightly higher than what the trade was expecting. So pretty much a neutral market. Total production just under 14.9 billion bushel, down 378 million from that 15.2 number they gave us in August. On the soybean side, 53.3 was the national average yield in August. Trade was expecting that to drop to about 51.8, and the USDA came out at 51.95. So you see from a yield standpoint, both on corn and soybeans, the yield per acre is slightly higher than what the trade was thinking. So it really wasn't a real positive report. Why did soybeans end up 18 cents higher for the day? Once again, we have to go back and look at that flow of money. You know, the commodity traders believed that these numbers were close enough to being friendly. They wanted to own more. And then, of course, we take this down to our ending stocks or the carryout. This, remember, the crop year for the USDA ends on August 31st. Now, here's our August numbers, 2.228 on corn. This is what's left over on August 31st. 2.253, slightly higher than what the trade was thinking, and a little bit higher than where we were in August. So ending stocks actually grew a little bit. On soybeans, 615 million was the ending stock number in August. The trade was looking for that to drop to about 600. This was a bullish number. The USDA came out dropping that a full 40 million bushel from August due to increased exports and crush, and we'll look at that in a minute. So that was a friendly number in the fact it was lower than what the trade was expecting, but this is still a very adequate ending stock number for soybeans. Nothing bullish about that in an average year. So now this number, these numbers will be fairly well set in stone, other than we have a stocks report that comes out the end of the month here on September 30th, and they may do some tweaking yet of this crop year. But basically this crop year is pretty much in the books. So we look ahead to the next crop year. Now this crop year started on September 1st of 2020, goes to August 31st, 2021. Ending stock projection in August report, 2.756, that's a bearish number. You know, and then there you had people thinking there that this number could possibly grow to over 3 billion bushels. So that was very negative. That's why we had very low price projections in August. In this report here, of course, looking at a smaller yield on corn, a smaller production number on corn, the common sense would tell you that the ending stock number should drop. And the trade was looking for that to go down to about 2.45. USDA came out at 2.503, slightly higher than the average estimate, but down substantially from the August estimate. What about soybeans? 610 million was their ending stock projection for the next crop year in the August report. Trade was looking for that to drop substantially, down to about 465. That was because we've seen very, very aggressive purchasing of soybeans by the Chinese the last 30 days here. Huge amount of beans purchased, and they were looking for the export number to go up and the ending stocks to come down on soybeans. And really the USDA came out very close, within 5 million bushel, actually at 460 million versus the average trade guess of 465. That's a quick recap of the numbers. Here's another slide from the USDA on this report. Once again, they talked about the Iowa derecho event of August 10th. And I thought this map was interesting. If you look at these in the extreme bold black lines, these areas here had winds of over 100 miles an hour. This is at a time when the corn crop is very vulnerable. The ears are almost finishing, you know, and a lot of damage. In fact, there were talk that some of these wind areas over 100, up to 120 miles per hour, just like an inland hurricane. The lighter black lines, this area here, showed wind speeds of 80 to 99 miles an hour, and then this lighter line, the large area, which encompasses probably about a third or more of the state of Iowa, winds of 60 to 80 miles an hour. Now, if you notice on this wind map, when we get to the drought map and look at the dry areas of Iowa, the dry areas were more in this western area and central. So here we had a double whammy in Iowa in this corn crop this year, and the fact that the dry areas didn't receive the wind damage, but the areas that had previously been very good in Iowa were damaged severely in this windstorm. So if we look at trying to see once, you know, do these yield changes make sense with the USDA? Here's another change for a slide from the USDA number. And if we look at August, here's August right here on this chart. And this dark red line is your crop conditions, your good to excellent ratings on corn for this crop year. Here we were in August, and here we were when this report was taken in September. So a definite decline in the good to excellent ratings. This is nationwide, so they were expecting the lower yields. On the yields per acre, we see some interesting things. For instance, let's just stay close to home. Minnesota yield for the state average, 200 bushel per acre, an all-time record. Previous record in Minnesota corn was 194. Now, I don't know what you folks are thinking out there, but in Southwest Minnesota, I'm having a hard time with that number. I guess we'll find out because we're not too far away from harvest, but I just think that's an awful big number. Granted, there are some parts of the state that are doing very, very well this year, but the Southwest district, we struggled with the lack of rainfall in August. We'll see once how that all pans out. Now, if you look at these numbers, this can be a little confusing. The USDA looks at the final bushel yield, and then it's the percent change, not the change. For instance, the Minnesota yield actually went up 3 bushel per acre, or 1.5%. Now, here's the supply and demand tables given out by the USDA for corn, and we see once again, here's our current crop year that ended on August 31st. In that supply and demand table, you know, remember we want to focus on really 4 areas: the feed residual, the ethanol, exports, and then of course this time of the year the production number. The production number doesn't change for this report, but they did make a slight change in ethanol, where they increased ethanol usage for corn 5 million bushel and decreased corn exports 30 million bushel. That resulted in a demand reduction of 25 million and the carryout going up 25 million bushel to 2.253. That now becomes our beginning number for the current crop year we're in, the one that started on September 1st. We always talk about the average farm price. Last year's average farm prices is cash corn, 360 is what the USDA said. And what I like to tell producers is your target should always be to try and beat this average price. Now, I know we talked about that in August, and in August it was 310, extremely low price. USDA in this report raised that 40 cents a bushel. That's a huge adjustment for the USDA to make in 1 month's time. But let's look at what caused that. Here's our 500,000 acre reduction in harvested acres. Remember, that was primarily Iowa and the derecho event. Average yield on those harvested acres lowered 3.3 bushel per acre. That took 378 million bushel of corn out of our supply picture. Now, we picked up 25 million, the increase from the last carryout. So as we bring that down, USDA reduced feed and residual 100 million bushel. They reduced ethanol 100 million bushel to 5.1. And, you know, exports were actually increased 100 million bushel. this is also due to the fact that China has been buying a lot of corn here, not only soybeans, but also quite a bit of U.S. corn, more than expected. So in the end, carry out for this the current crop year decreased 253 million to 2.503. Now, folks, this is still a big ending stock number on corn. And if you notice from year to year, stocks are not getting smaller. In fact, the USDA is projecting stocks to grow. 2.5 billion is a lot of corn left over. So we have to be very careful on our marketing here, I think, because we just don't know what's going to happen down the road. So now our new target as far as marketing would be to try and beat this 350 area on corn, the average price projection. Now, what might be changing in the future? Well, of course, when we get to the October-November report, the USDA could possibly reduce this yield again from 178.5. They could possibly reduce harvested acres. And this is something that I just noticed this morning. It came out over the weekend. After the monthly USDA reports this time of the year, they always also give us an update on the prevented planting acres for corn and soybeans. Now, this came out, and I haven't heard anybody talk about that yet, but I think it'll be a subject today. If we look at how that prevented planted acres number changed on corn, in August, they came out after the August report with a reduction of planted acres of corn of 5.3 million. That raised to over 6 million acres in this update now for September. So theoretically, there's 703,000 corn acres that did not get planted. Now I'm thinking maybe the USDA will incorporate that 550,000 reduction due to the wind event. So still, it looks like this corn acreage number on the harvested side could slip a little bit. If this goes down, and if the yield would happen to go down, of course, then our production number goes down, and the ending stock number would not be at that 2.5. That's why the market probably didn't react real negative to that number. Now, when we look at that, let's go back to that balance table one more time. One other thing I always encourage people to watch, and that's the stocks to use ratio. That's a figure that the market watches very closely. What does that mean? You take your ending stock number, in this case of 2.503, divided by your total demand of 14.675 billion bushel, you'll come up with your stocks to use ratio, this year 17.1%. Now, what does that mean? Well, if we look at a historical chart that StoneX puts together, here's our 17% stocks to use ratio right here. That should equate to about a $3.50 cash price for corn, which is close to where the USDA is estimating right now. You see, to really get excitement in the corn market, to start getting $4 plus futures on corn, we would need to get that stocks to use ratio down to 9% or less. We're not there yet. So this corn situation right now, more than adequate. But we have other people out there trying to project the yields. Here's a chart by R.J. O'Brien. They've got some excellent people on staff down there that do this research. They put together a crop condition index, and this is based on our weekly crop conditions, the good to excellent ratings and all of that good stuff. And if we look here, this is where we were at the end of last week, and this is about where they think we're going to end up as we get to the end of this growing season. Their yield is a little bit lower. USDA at 178.5. R.J. O'Brien, if we look at their analysis, they're thinking that yield could be as low as 175.4. Now, if that happens, of course, you end up with less production, a few changes on supply and demand as far as what the USDA has projected versus R.J. O'Brien, but their carryout projection right now is 2.265. Really pretty much unchanged from the current crop year. Stocks to use ratio would still be 15.3%, more than adequate. We are not short corn right now, but the questions in the marketplace, does this crop get smaller, and does China keep buying corn? One quick slide on ethanol. You know, this is a big demand piece of corn right now. It's usually our number one, number two use of corn, and we can see right now when we went through the COVID event of this spring, you know, we really took margins down extremely low. A lot of ethanol plants slowed down, shut down, but margins have definitely recovered here drastically. And we see right now pretty good demand from the ethanol side. From a DDG standpoint, where we market DDGs for our feed mills, supply is building right now. And right now, these plants intend to keep running. As especially with the supply of corn that we see coming with good crops in most of the upper plains. Okay, let's look at soybeans. Look at the same type of analysis as we started on corn. Here in August was our good to excellent rating that the USDA had for the soybean crop. You can see that also declined substantially as we went through the month. It was a dry August pretty much in most of the Corn Belt. So as that happened, we expected lower yields nationwide, and the USDA did come right in line with that, lowering that yield down to 51.9. Once again, state of Minnesota, I don't know, we're trying to be number one this year. I guess it may not be, can I say this? It may not be the Minnesota Vikings after yesterday's game. Boy, that was a disappointment, wasn't it? But from a crop standpoint, looking at all-time record corn yield of 200 bushel per acre statewide, and the USDA in this report raising the Minnesota soybean crop 52 bushel statewide. That would match our old record. So we're looking at record corn and soybean crops in the state. You can see, though, a lot of the northern plains, and Iowa in particular, down pretty sharply. Iowa was pretty much the wind event, combination of the wind and dry. Some of the other northern plain states, it was just a little bit too dry. So if we look at the soybean supply and demand tables, here's our current crop year right here. We've seen an increase of 10 million in the crush. That was pretty much warranted because we've seen record crush numbers almost every month. Exports were increased 30 million bushel. This was a surprise. People were not expecting the USDA to make this big a bump in exports for this crop year. They were expecting it to come in the next crop year, but the fact of the matter is they did. That was a small change in residual, so a carryout dropped 40 million bushel from 615 to 575, which now becomes our beginning number for the current crop year that we just started. Prices of soybeans for last crop year left unchanged at 855. So if we go ahead to this crop year now, here's our 1.4 bushel per acre yield reduction that the USDA gave us in this report from 53.3 to 51.9. They left harvested acres on soybeans unchanged, basically saying that they did not see any reason to lower harvested acres in Iowa because of the wind event, as soybeans withstood the wind a lot better. Although there were talk about blossoms being blown off, pods being blown off, harvested acres, they're still going to combine all of those beans the way it stands right now. As we look at that then, the reduction of last year's carryout of 40 million, the 1.4 bushel per acre yield reduction on the harvested acres took 112 million bushel of soybeans out of our supply or out of our production side, and that brings production down 152 million. Now, for the USDA demand in this current crop year, they made no changes in crush, in exports. The only change was a 2 million change in residual. So most of that 150 reduction came right to the bottom line, taking that carry out down to 460 million. Now, once again, this is a huge change month to month, 150 million bushel reduction in any stock projection. I've never seen the average price increase this much in 1 month, up 90 cents to now $9.25 versus $8.35 in August. But still, folks, we have to look at this and seriously say, is a 460 million bushel carryout a bullish number? Not really. For that number to get exciting, most of the time we'd want to see that get well under 300 million and probably even under 200 million bushels. So we're not going to be out of beans on August 31st, 2021. Let's look at the stocks to use ratio. Dividing this 460 million ending stock number by 4.442 total demand, our stocks to use ratio, 10.4%. Now, that's getting a little bit more interesting, and I think that's why we've seen some interest come into the market. But if we look at that from a historical standpoint, this was a chart put together by a different trader out of Stone, but it actually is a source from the USDA WASDE numbers. And we see that even at that 10.4 stocks to use ratio, which is down substantially from the August number, down substantially from last year, it still would be the third highest stocks to use ratio in the last 10 years. Not really all that bullish. And if we look at Stone's analysis on what stocks to use ratios means to the price outlook, we see that at 10.4%, we'd be looking right around 9 to 950 beans, which is what the market kind of indicated, 925 in this report right there. But for the the soybean market to really get excited from a price standpoint and start talking about 10 and 11 and beans in the teens, like we like to talk about, we need to see that stocks to use ratio get lower than 7%. Now, can that happen this year? Well, here's RJO's estimate on the soybean yield, USDA at 51.9 right now in the September report. RJ O'Brien thinks that the dry August is going to have a little bit more of an effect on soybeans as we wind things up, and actually they're using a crop yield on soybeans of 51.2. Not all that much different than the USDA, but slightly smaller, which would bring the production number down a little bit, about 63 million bushel, I think. And then if we look at the demand, excuse me here, RJ O'Brien, pretty friendly on soybean demand. They think the USDA is going to have to raise that export number for the current crop year another 50 million bushel because of what's going on with China right now. And they actually have this carry out for next year. They're projecting at around 357 versus the USDA at 460. That would take our stocks to use ratio down to 8%. We're getting close to an area where the yellow caution lights are flashing, and the market might want to get a little more interested. I think this is one of the reasons that we see money, that flow of money coming into soybeans. There is potential on the soybean side, but we have to look at the southern hemisphere and see what's going on down there, and we'll do that in just a minute here. Now, also on the prevented planted acres on soybeans, if we look at the change from August to September, we see the USDA and their numbers raising that prevented planted number of soybeans about 227,000 acres. Not a huge deal, but once again, could make this crop a little bit smaller than what we looked at in the September report. Now let's go globally. And we're going to go through this chart fairly quickly. The ending stocks number for the current crop year on corn, 311 million metric ton. Trade was expecting it to be pretty much unchanged, and the USDA came out a little bit lower. Demand is very strong right now in the world on corn. On soybeans, 95 million metric ton in August, 95.7 was the estimate. Actually, trade came out a little bit higher, or USDA a little higher at 96, so really no drama there. And really, if we look at the current crop year, 317 million. So you see in August, the stocks were looking to build. And now with the reduction in the U.S. crop, we see the average estimate pretty much unchanged from a year ago. And actually, this number was probably the most friendly number on corn that we had in this report, where they actually took the ending stocks of corn for the world down to 306 million metric ton. That is a big change from August of 317. So that means that we're basically using corn, pretty much using what we're raising. We're not building stocks. Soybeans, 95.36 in August. Trade was looking for that to be down slightly with the U.S. crop and increased exports into China. And the USDA came in at 93.59. So pretty much in line. Once again, we're not going to run out of things in the world, but we have to look forward to see what's coming in new crops. And that's why we look at this slide. Here's the South American projections right now. And over on this right-hand side, this is what the trade is believing that Brazil and Argentina are going to raise for corn and soybeans in the current crop year. Some of these crops are just now being planted, and some of these crops are just now being planned. So let's look ahead. First of all, just keep in mind the Argentina crop for this year, 50 million metric ton. USDA is saying they expect that to be about the same type of crop, corn crop out of Argentina next year. Soybeans, 49.7 this year, looking for an increase to about 53.5, which may be affected by the La Nina. And we'll look at that when we get to the weather section. But here's something that I think the market totally overlooked, and we need to be aware of it. Not the news we want to hear. But the Brazilian corn crop, 102 million metric ton in this crop year. In August, that was projected to be up to 107 for the crop that they're going to be planted. USDA raised that 3 million metric ton to 110. This is a big number. And we have to keep in mind that a lot of what Brazil raises, they are going to export. So if in fact Brazil has a crop this large next year, that's going to make it a challenge for U.S. corn exports potentially. What about soybeans? This crop year, 126 million metric ton crop. We know how aggressive they were at shipping beans to China as we went through this year. In August, it was looking for that to go up to 131 million. USDA in this report raised that another 2 million metric ton up to 133. That's a huge crop, but as we said earlier, just now kind of in the early planting stages, they have dry conditions and the jury's still out. Can they actually raise that type of crop? And we'll see as we go forward. That's why we have these monthly reports. Here's just a quick glimpse of the world. On this chart here, we see world demand in the red and world production of corn in the blue. And actually, you see, it looks right now, if we just look at the hard numbers, that we're raising a little bit more corn than what we're going to use in the world. So, but it's pretty neutral. We're pretty much using what we raise. What about the export side? This is important now because the U.S. really needs these exports to kind of get rid of the excess stocks that we've had. This is a chart that comes out each Monday that I look at that compares the price of corn in Brazil, Argentina, the U.S., and the Ukraine. And then we have our months of October, December, January over here on the side. We can see right now, U.S. corn prices, this is in a metric ton, cheaper than Ukraine, cheaper than Brazil, a little bit higher on paper out of Argentina. But if we look at Argentina, there's a little bit of an extra fee of around $4 a metric ton to top off vessels that they have to take to a different loading facility. So that would make them pretty much on par. The challenge is Brazil is out of corn. In fact, there's a president of one of the large associations in Brazil we'll talk about in a minute here that really is entertaining the idea of possibly having to import U.S. grain because they've kind of oversold their position right now. Argentina, a lot of issues down there, so not really available. The world knows they can come and get corn 24/7 out of the U.S. We are competitive price-wise, and we do actually have sales well ahead of a year ago. The challenge right now is we're just not seeing shipments quite where we need them to be. Here's a chart that compares the U.S. corn exports versus Brazil. Brazil is in the blue, U.S. is in the orange. And you can see here, if we look at the last 5 years here, corn exports in Brazil is tending to go up. As they raise larger crops, they're going to export a lot of that corn. And right now, you can see the window of them starting to export more corn when they're harvesting their safrinha crop would be July forward. So we're coming into a time frame where, you know, they could be more competitive, but the U.S. exports, when the Brazilian corn exports are high, you can see ours tend to be low. And we really hope this can bounce up a little bit because we have sales on the books that we want to get shipped. Now, as we look at new crop forward, we see a whole different thing. This black line here is the new crop corn export sales on the books right now for the current crop year 2020-21. Much higher than what we've been for the last 5 years, and this is optimistic. Now, the sales are on the books. What do we need to have happen? We need to see the shipments made, and the market will be watching that closely. What about soybean? The reason I put these two charts on to compare, you know, world corn and soybean production and demand. You know, on corn, we were running kind of step for step, where the production and the demand were pretty much in line. Look at this slide, and this should be a little bit of an eye-opener if you're having thoughts about possibly wanting to market soybeans at these type of prices. Here's our world demand, and you know, here's 2018. This is pretty much, a lot of this had to do with the trade war, but it also had to do with what? ASF, or African swine fever in China. A huge reduction in demand in the world, and most of this was China. Now, as they rebuild their herd, you know, the demand is going up for world soybean. But folks, look at what's happened to soybean production. We were looking at potentially a record crop in the U.S. this year. We're looking at a record crop that they just raised in Brazil and Argentina. And now we're looking at a possibly bigger crop in South America for this year. This gap is getting too wide where you know, if we have any hiccup in demand here, we've got too many beans in the world. So this is something we need to watch very carefully. Right now, the flow of the money doesn't care about this. How are we competitive-wise on soybeans? Well, there's been a lot of talk. You know, has China been buying beans lately at such a fast pace because of phase one, because of the new trade deal? Not really. It's because we're price competitive. We now in the U.S. have the cheapest soybeans in the world. You can see Argentina they don't offer a lot of whole beans. They pretty much crush their beans and sell the meal and the oil. So they're not really a big player in the world soybean market. Typically it is Brazil, and that's who China will look at first. $416 a metric ton, US at $396 last week. An average of about $20 a metric ton. That's serious cash. That's about 64 cents a bushel. This is why China's buying beans. And you can see right now that Brazil really doesn't have anything offered because they're pretty much, their bins are empty. They've sold everything very aggressively to China. Now they start offering things in February when their new crop starts coming off. But let's see, October, November, December, January, we've got about 4 or 5 months here now where the U.S. should really make hay. We need to see big export shipments as we go forward because we are competitive and we do have the beans in the marketplace. Here's the same type of analysis on U.S., Brazil, and we also bring Argentina into this, but you can see Argentina is pretty much a flat line in the gray. Really, they don't export many whole beans. Here's Brazil. As this Brazilian farmer has been raising more and more soybeans, what have they been doing? They are exporting, and they are super, super competitive, and that also has to do with their currency comparison between the Brazilian real and the US dollar. That you can see when they raise a big crop, they're going to have big exports. When they have big exports, US exports are very low. Now, what do we have going on right now? Look at this far right-hand side, and that's kind of where we're at right now. You see that Brazilian number is going almost down to zero. They are out of beans. And really, there's talk now by a new president that leads the association in Brazil called CONAB. He came out with an article on Friday saying he thinks we need to open trade up more out of Brazil and possibly even with the US, remove tariffs. He's talking about possibly having to buy US soybeans in the near term here to meet some of their projections. And on the corn side, we're seeing a tremendous increase in domestic demand of corn in Brazil, which makes it a little bit more challenging for them to possibly be as aggressive on the export side. But you can see right now, if Brazil has a 133 million metric ton crop next year, you're going to see this number as high on export, making it a big challenge for the U.S. But that's months down the road. Here's a soybean basis table that Stone put out last week. And you can see right now on nearby soybeans, you can buy nearby soybeans that's around 67 to 65 over the U.S. Gulf. Look at those basis numbers out of Santos, one of the ports in Brazil, Paranaguá. You know, $1.80 to $2 over. That's why we're selling U.S. beans. But when they get to their new crop, look what's happened. All of a sudden, those bids are super competitive. So when they have the beans, they're going to export the beans. Here's a new crop bean chart, and this has to do with that price situation we just talked about. A lot of this is China. Here's our current export sales on the books for new crop for this crop year, 2020-21, much higher than the last 5 years and very optimistic. That's one of the reasons why we see managed money, I think, chasing the soybean market right now. A slide here that's a little bit old, but this basically shows that the relationship between the Brazilian real and the US dollar is creating windfall profits for the Brazilian farmer. It's why we see projections of soybean acreage being up in Brazil about 3%, yields being better due to better managing practices. These folks in Brazil are making a lot of money. And as the market rallies in the US, what does that mean? Well, as our market rallies here, the Brazilian farmer prices that based on the Chicago Board of Trade. So as our market rallies, it's making that even more better, or improving their situation down there. In the currency situation, the spread between the real and the dollar still stays at a level where very attractive for them to increase production of both corn and soybeans. Let's talk briefly about China. And a quick trade update. This also comes from Arlen at StoneX in his webinar they had after Friday's report. Now, we know from a dollar standpoint, we're probably not going to hit that 36.5 billion bushel in purchases of U.S. ag in this crop year. Part of that is COVID, and everybody's aware of that. Demand was down. Part of that is the fact that our prices were so low. Had our prices been at higher levels when China was doing a lot of this buying, of course, that would have inflated their dollars of purchases. But they have been doing an excellent job here lately. Shipments for September through December should be very strong to China. Now, the risk that we face, we have a lot of sales on the books. Now, this has never happened before, right? But has China ever made purchases from countries and then didn't follow through and take the shipments? And I think that's a little bit of a concern of the marketplace. But right now, it looks like they need the beans. We have the beans. It's probably going to happen. Now, we're probably not going to hit the 36.5 billion bushel number that was projected for this crop year. But we think that as we go forward, due to the volume of corn and soybeans and wheat and pork that China has purchased from the U.S. over the last few months, that total number is probably going to surprise people. What does the election have to possibly do with our relationship with China and our trade? And I thought this was an interesting chart that Arlen threw in his presentation. This is from the general public, but it looks at the unfavorable views of China versus the U.S. And we can see from a general population standpoint, 73% of us in this survey believe that China is probably not such a good trading partner, that they've been taking advantage of us. About 20% all that think it's favorable. Now, what about the difference between the parties? You know, some folks have said, well, if the Republicans lose the White House, that's going to change things. Well, maybe not. If we look at the survey that was done with representatives in Washington between the parties, we've seen the Republican side definitely 72% have a stronger position and believe we need to rein things with China. But 62% of the Democrats also said the same thing. So what we've seen is an increase here on both political parties saying that the U.S. has to take a firmer stand and get things the way they need to be with China, stop some of the misuses and abuses that have happened in the past. So maybe China, you know, if they're looking for a change in the party in control of Washington, maybe it doesn't help them as much as what they think. So an overall quick 35,000 view of the China situation. Right now, the food security is the top priority in China. And that's why they're buying U.S. corn and U.S. beans. It's not because they like us. It's not because of phase one. It's because they need it. They have growing demand now. As African swine fever kind of winds down, meat prices for pork, the preferred meat in China, extremely high. You know, and here's another thing that the China government has been telling their people about the coronavirus, that they're convinced that they handled it properly and they shut everything down. And they're convinced that the rest of the world, Brazil, US, Argentina, possibly the Ukraine, will have to shut down their ports at some point in time. If that happens with all of the corn and soybeans and pork and wheat that they buy in the world, there could be food shortages, and they don't want that. So they're building stocks right now. Some people would call it hoarding, but they're doing it for self-sufficiency so that they can tell their people they will never run out of food. Now, there's been a lot of talk lately about the ending stocks of corn in China. They've been having government auctions for the last several years, really, to reduce some of their stocks. They've been selling those at very high prices, which we'll look at in a second here. But there's a thought process right now. China's had some interesting problems this year. First of all, they've had 3 major typhoons hit their countryside that did damage to their corn crop. They have growing demand now as African swine fever is reduced, and they're feeding more pigs and chickens and dairy to make more food for their people. So there's talk that they could be short corn up to 25 to 50 million metric ton. Here's a slide not of the wind damage of the derecho event in Iowa. This is a cornfield in China. Looks pretty good, but also looks pretty flat. A lot of rain, a lot of wind. Here's an article from a Chinese higher up that he gave at a conference in, I believe it was in Ukraine this past week or so, and basically saying some of these things. You know, first of all, the USDA right now has 7 million metric ton of corn approved for import into China. That's their TRQ or import program right now. Well, something doesn't add up here, and the USDA didn't address this in last Friday's report, because right now we know that the country of China has purchased from the US alone around 8.8 million metric ton of corn to be imported in this crop year. They've purchased 2 to 3 million metric ton from the Ukraine. They've purchased possibly up to 3 million metric ton from Brazil. Those numbers are way above 7 million. So you see this number of the import permits for China will need to be raised, and there's a lot of questions. Will it be to 10 million, 15 million, 20 million? This gentleman from China said it could be all the way up to 50 million. Now, if we see a big number like that released at China, and I don't think anybody's anticipating that, that would all of a sudden change the corn outlook in a fairly significant way. Here's a chart of the corn prices in US dollars that China has been selling their government stock for, an average of about $7.11 a bushel. The Dalian exchange last week traded nearby corn futures close to $9 a bushel. That's another reason why they're buying US corn, because they can buy our corn very cheap, pay the freight, even pay the income or the tariffs into their country, and still be money ahead. This chart kind of looks at the stock situation of soybeans, and I think this is important to be aware of. Here's the ending stock number of soybeans in China in 2018, 19 million metric ton, 2019, 24, projected this year to be 26. You see, they're building stocks. They're building soybean stocks, a rainy day fund, just in case there's ever a production problem in the US or Brazil. I think we have to be careful because China will buy right now about 70% of all of the soybeans that are exported in the world, whether from the southern hemisphere or from the US, and they are building stocks. So there may come a day where they say their buying actually slows down. African swine fever in China, definitely causing very high pork prices, very high market hog prices. In fact, if you're a farmer in China right now, talk is that you're making about $350 per head of hog that you market. Now, granted, there's challenges because of the disease, but it's extremely profitable, and they're trying to gear up that production as quickly as they can. One slide on the coronavirus, and this is coming back to the US now. You know, we've seen a lot of recovery. Meat processing plants are nearly back to capacity. Hog slaughter is just about caught up. Cattle slaughter is going to take a little bit longer, but they're making progress. You know, and I like Arlen's comment here. Coronavirus doesn't scare me. People's response to it scares me. And we've seen that as we went through the spring, where demand down sharply, people not going to restaurants, people not driving. That impacts our corn and soybean positions and prices, and we hope that doesn't happen again. Let's talk weather. Here's our drought monitor map, and this comes out each Thursday, and this is the one from the past week, and we can see these red areas, Southwest extreme drought. Of course, they don't raise crops out there, so nobody talks about it, but we do know how it impacts the areas that are currently under forest fires in like Oregon and parts of California, and that possibly will affect us. But if we zero in on Iowa, we see a large part of Iowa extreme drought. Then if we look at that section here that really wasn't in the drought as bad, affected by the wind. So our #1 producing state of corn and soybeans definitely impacted by weather this year. And you can see some of this little yellow and brown getting awfully close to our area here. The next couple of maps are, I think, are important to kind of put a perspective on things here. And this looks at statewide precipitation for the month of August. Now, the brown here would be the record driest in, I think, like about 125 years. Nebraska, the driest August that they've ever had. Third driest ever in Iowa. And even Illinois, fairly dry. You see, statewide in Minnesota, we're down to where we had more than adequate moisture. But let's zero in on that. If we look at a crop district area, we see all of a sudden that our area right here, below average moisture in August. We see most of the state of Iowa, either record or much below average. About half of Illinois, Nebraska, you know, and this really causes a lot of uncertainty as far as what are these corn and soybean crops going to be. Now, if you look at Minnesota, Minnesota is a state projecting records for both corn and soybeans. But you see the largest part of the state had above to much above precip during August. But look at the southern tier counties. And folks, I don't know, in my years I've seen this area here be pretty crucial as far as production for the state. Yes, they have some excellent crops up in this area here, but the main part of your states main part of your production in the southern part. We have 2/3 of that look like it's near normal for August moisture, and of course we were extremely dry here. Here's world weather and what they're looking for the balance of September. And I could have included the first half of September, but basically they said cool and normal to below normal on precip, which is pretty close to what we had. For the balance of the month, they're looking at temperatures rebounding and going back to above normal. Keep in mind now, this is above normal for last half of September. Doesn't mean 90 degrees, but warmer than what we've had this past week. But they're looking for the dryness to continue. This right now looks like pretty ideal harvesting conditions for soybeans if in fact it happens in the last half of the month. Here's what they're thinking for October, November. Continue to see temperatures normal to above normal, especially for our area here, and continue to see below normal for most of our area as far as precip. Looks like an outlook for very good harvest this fall. Except if you look to the eastern corn belt, you notice possibly above normal precip out there. What's causing that? Well, we've had a very interesting situation going on right now on the Atlantic side. And most of the government agencies now that have to do with meteorology will be talking about record tropical storms and hurricanes. In fact, I think we have Sally that's coming into possibly the New Orleans area again as early as tonight or early tomorrow morning. That could bring a lot of moisture into these areas and actually cause some delays and problems in the eastern corn belt. We'll have to wait and see how that pans out. The questions, as we go forward here. Now let's go globally. And here's our most recent map on the La Nina. Remember, a La Nina looks for these blue water temperatures, sea surface temperatures along the equator off of the coast of South America. These have intensified greatly. And now NOAA is saying they expect this La Nina to be in full force and 75% chance we're going to have a very strong one. You see, if we look at the Atlantic side, we see all of these oranges. These are warmer than normal sea surface temperatures. That's conducive to producing tropical storms and hurricanes, which come into the U.S. if they make landfall. We see warm water off the west coast, and this really keeps us from having droughty type conditions over a lot of the country. But the La Nina is an issue right now as we go forward. What does that mean? What do we need to watch? Argentina is typically the country affected most. Argentina's soybean production. We look here in the red circles at previous La Nina years, and we see the soybean crop in Argentina tends to be smaller than what we'd like to see. Now, what does it do for Brazil? Brazil actually tends to have good soybean crops in La Nina years. The risk in Brazil is the fact that it gets dry in the southern part of Brazil as we go through the La Nina. That can delay the soybean planting. If they plant soybeans now in dry soil in Brazil, they won't do anything. They have to wait for the rains to kick in. And until that happens, they won't plant soybeans. And if they delay the soybean planting, it also will delay the harvest of the soybean and the planting of their second crop of corn or their safrinha crop. So it may have an effect on Brazilian production, but more so on the corn side rather than the bean side. So, this type of thing, La Nina in Brazil probably doesn't affect the outlook of a big crop. It could affect the crop size in Argentina. Now, as we get into the prices, let's look at where our commodity funds are at. And I think this is important to have a perspective. At our last webinar, we talked about the fact the funds were still short corn. We said if they decide to cover that short position and they cover half of it, at that time I think it was almost 200,000 contracts, probably worth 20 cents a bushel. If they were to cover it all, probably worth 40 to 50 cents a bushel. Well, what's happened? If we look back on the 4th of August, commodity funds were short 195,000 contracts. Going home on Friday, they're now long 46,000. That's a swing of over 200,000 contracts in the last 30 days. Last 5 weeks. One of the reasons why we've seen the market rally. Remember now, as we talked about earlier, it's the flow of money. You definitely see the flow of money come into the corn market over the last 4 to 5 weeks. That creates opportunities, right? What about soybeans? When we looked at that August webinar, they were just slightly long. They had just recently became long soybeans, around 40,000 contracts. Now they're long close to 200. A big swing there, a lot of money flowing into the commodity, into soybeans, into the commodity portfolio as a whole. So let's look at nearby chart. This is based as of Friday's close. This morning and during the night session, the corn market was pretty non-committal, up 1 to 2 cents. You know, not a big thing here. This is a daily continuation chart of nearby corn. This is about where we were at when we did the August webinar. About a 45 to 50 cent rally on futures. What do we see here? Well, we have a small gap open on the continuation chart over here that we need to keep an eye on. We're getting very close to filling that gap. I'm a firm believer that gaps are meant to be filled. So if you want to get bullish corn, you can say, well, we can work a little bit higher. If we get up to 370, we fill that gap. But if we want to be honest about the gaps are meant to be filled, then we can't forget about this guy. And we left a gap as this market started to rally from 332 to 334. Now, I'm not saying we go back down there, but at some point in time we will. So we have to be a little bit careful. Fundamentals still are not that bullish on corn. Carry out thought to be by a lot of people 2.2 to 2.5 number, 2 billion bushel, which is what the government said. So nothing real dramatic there. So we look at trying to stay disciplined. And one thing we always talk about, watch that average price, right? And also watch the RSI, Relative Strength Index. And when that RSI gets around 80, the market is overbought and due for a correction down. We closed it Friday on the RSI at 82.5. Made new highs. Time to get bullish or time to reward the market? If we look at past times when the RSI gets those type of levels, we tend to be at or near a top. So be careful. If you have corn to sell, especially on the old crop side, I think this is an opportunity the good Lord has blessed us with. What about new crop? Here's a December corn chart. Made new highs on Friday, just under 370. We look there, nice uptrend. We also left a gap here on the December chart, 346 to 348. Right now, we should have good support around the 360 area, but does the market have to go a lot higher? Well, it's going to depend on demand. Or do we still keep seeing more sales made to China? Do we see the shipments actually take place? And then, of course, what happens down the road as far as our crop potential and production, as far as yield and acres. RSI on new crop corn at 73, so we're not quite as high, so maybe we have a little more room to give, but be careful. This is an awfully nice rally. Keep in mind that on the 4th of August, nearby futures in Chicago are at 320. This is one chart I wanted to throw in today. Maybe gives us a little bit more of a target. And once again, it's a perspective check. This looks at corn prices for the last 5 years. And here's where we closed on Friday. As we get up into that 375 to possibly 380 area, if this market rallies a little bit more, we are in the upper 30% of corn prices for the last 5 years. Now, if we look at where we were in August, we were in the lower 10%. A nice recovery, something we need to be careful of. Try and stay disciplined. I'd recommend, selling in percentages. Don't beat yourself up. If you make a sale and the market goes a little bit higher, then sell a little bit more. Don't try and hold out for that very top price. Here's our daily continuation chart on nearby soybeans. A nice run up from mid-August, 869 in August to as high as 1025, last Friday. And the market was higher today. So far today, we've seen that market go back up and retest that 1025 high. Hasn't taken it out yet. We've left a couple of gaps as we went higher here on soybeans, but right now the money is chasing soybeans. What about our RSI? Should we be disciplined here? Remember, an RSI at 80 or above is overbought. Our RSI on Friday on nearby soybeans just under 93. Quite honestly, we can go back and look over the last year. Have never seen it that high. Maybe guys are finally getting it right. I think this is an opportunity. Maybe we need to be watching very closely. And if we look at November soybeans, once again, we took our old highs from way back in January. I think on nearby beans, we're at a higher price than we've been since 2018. If we look at RSI on November beans, 91.4 going home on Friday. Well above the 80%. This market is severely overbought. Does it mean we have to correct lower? No, not as long as the money flow keeps coming after soybeans. But we have to be very careful because there's red lights flashing saying, be careful here. We've had an awfully nice rally. What do we do as we go forward? And if we look at soybeans as far as the last 5 years, Friday's close put us into that upper 30%. Once again, we go back to May or July of this year with COVID going on, reduced demand. We are in lower 10%. So quite a nice opportunity that what we've had here. And if we look at overall, I looked at compared prices from August 12th until Friday's close. Corn market has rallied 61 cents a bushel in cash corn. Now, basis has also improved about 20 cents of that. So it was around 40 cent gain on the future side and around 20 cents on basis. But 61 cent rally the last 30 days on corn, with a number still projecting ending stocks at 2 billion plus. I think it's something to possibly consider taking advantage of part of your production, making some sales here. What about soybeans? August 12th, cash soybeans at New Vision, $8.15. Friday's close, September 11th, basically a month different. A rally of $1.21 a bushel. Basis, not a lot of change, maybe about 8 cents better, so most of that was futures. Money coming after the soybean market. I think this is something where we have to look at the good Lord giving us another opportunity. If you look at the USDA yields, it says Minnesota's going to have record corn and soybean crops, and now we've put 60 cents on corn, $1.20 on beans the last 30 days. So when we look at our bid page from Friday, I always encourage producers ask the question this: what's the market telling you to do? Remember, there are 3 types of market. There's a flat market where we see on corn, we're basically 329 September through November. There's a flat market on soybeans from September all the way out, really, through March. What is the market telling you in a flat market? If you need some money, you just well sell it now because it doesn't pay you to store grain. Now, if we look longer term here, the carry from new crop of 329 out to next August, 357. 28 cent carry. If you have on-farm storage, the market is telling you store your corn at home. Don't look to sell this price here. Look to sell the carry. Remember what the average price was projected by the USDA? Up 40 cents, $3.50. You can lock that in right now by selling the carry. Okay. Another type of market is a carrying charge market, and that's what we looked at in corn. Now, the third type of market is an inverted market. In an inverted market, what is the market telling you to do? It's telling you sell today because there's no incentive to store. Look what we have on soybeans. We have a flat market out to March, and then the market begins to invert. Now, why would it be doing that? What do we see happening in the world as we get to February forward? A big crop possibly out of Brazil. Exports being taken out of Brazil versus the U.S. The market is telling you, sell your beans now. Now, price is the same. So if you want to sell for January, that's fine. Monitor your income that way, but be careful about selling soybeans. Remember, the average price projection raised 90 cents a bushel in this USDA report from $8.35 to $9.25. You're above the average price projected by the USDA right now. And the market at one time, I think, traded at least a dime higher again overnight. Does it mean the market's done? No, the market can still go higher. But we're at levels where we need to probably stay disciplined and really consider making some sales. So what do I do from this point forward? I keep a close eye on basis changes. Right now, we have a huge number of soybeans on the books with China. I've seen estimates of close to over 18 million metric ton. That's probably going to go higher because we're still very competitive. This soybean basis is going to get very interesting as we go through harvest. You know, you can see a flat market now, but the market needs to source a lot of these beans as we go through harvest. So keep an eye on basis for corn and beans. Right now, the American farmer hasn't been doing a lot of selling. Ethanol margins are decent. So there's been some interesting things going on there. Basis is really pretty firm as we enter harvest here right now, considering the crop we're looking at. Keep up to date with commodity fund position. They went from being short corn, an extreme long short position on corn, now being long. What do they do as we go forward? They've built a big long position on soybeans. Keep these average prices in mind. Crop year we just finished, 360 on corn, 350 is what the USDA is projecting now for 2020-21. 855 was last year, 925 is this year. I would use these as targets in your marketing plan, and your job is to beat those targets. Make it look, good. If you do that, you will be fine. Monitor global events and weather. China, a lot of problems there with potentially the corn crop. Brazil, not too much concern right now, although it is dry in southern Brazil. Argentina is the area to watch as far as the effects of La Nina. And Ukraine has also had some issues here. Watch the La Nina. Keep an eye on weather patterns in Brazil and Argentina. Sea surface temperatures will affect tropical storms and possibly harvest conditions, more so in the eastern corn belt. Market indicators such as RSI, keep an eye on those. Above 80, market's overbought. That's usually not a bad time to make sales. Respect and reward market rallies. Up 60 cents on corn last month, up $1.20 on beans last month. Avoid the yabba. Yabba, if I sell today, it might go higher tomorrow. Yeah, you have to stay disciplined. Don't get too bullish at the wrong time. Just a couple of slides on New Vision. Our objective each and every day is to provide service and value to you, the producer, the customers and owners of New Vision. We take that very seriously, and we have a lot of facilities, and we can meet your needs wherever you're at. Here's our origination team, and you can go back and look at this later. I think this webinar is being recorded. You should be able to go back and view it if you need to check on these numbers. These guys are all top professionals to help you market your grain. I want to take time to thank you very much for taking time out of your day to participate in this webinar. Special thanks to all the New Vision employees that kind of had a panic attack yesterday when this meeting number was changed, and I was texting Matt, we were texting Dean, and I think hopefully everything worked out. But we do this to try and make your marketing better. And I always like to wrap up these webinars and all of my meetings with something other than just market information. And this was something that popped up when I was putting this information together over the weekend. It was a saying that I think it fits 2020 with COVID and the weather and everything that we've had. When life is hard, it's easy to focus only on the bad things and forget about all the good things God has given us. But God has blessed every one of us in ways we often overlook. Don't forget to say thank you. Good crop in the field, good prices now. By the way, that saying came from former evangelist Billy Graham. Great day to be alive. Thank you for your time, and have a safe harvest. And we're probably looking to do this now, try and do this after each USDA crop report. I realize in October you'll be busy in the field, but that's why these things will be recorded. You get a rainy day or have some time, you can sure tune in and look at it again. A stocks report coming up by the USDA on September 30th. That could be a big number because we kind of finalize those numbers, and I think we're going to see some changes in possibly feed residual on corn in that report, and also possibly a revision of the 2019 soybean crop. So stay tuned. Have a great day, and thanks for your business. We appreciate it very much.